amount or a value that is less by 1050, because when you credit supply is an asset, so it decreases on the credit side, which means that I need to show my supplies account with a value that is less by 1050. And for the supplies expense, it is debited, which means it increases on the debit side. So you should show your supplies expense account balance with a value that is greater by 1050. How can you do so? You need to just factor in these adjustments in your unadjusted trial balance. So let me go through them one by one. First of all, in the unadjusted trial balance, you have cash debit 4,350. There is no adjustment on the cash account because, as we discussed, the cash account will never be affected by an adjusting entry. So which means here in your adjusted trial balance, how much you should be having for the cash account? Same, 4,350. Why? Because nothing affected the cash account through an adjusting entry. Now, account receivable, before it was in the unadjusted trial balance, it was 0, nothing on the debit side, nothing on the credit side. But then we recorded an adjusting entry and we debited accounts receivable by 1,800, which means in the adjusted trial balance, my accounts receivable value increased by 1,800. So the amount should be 1,800 on the debit side. Now, supplies account, before the adjustments, it was 9,720 for the supplies. There was an adjusting entry that credited supplies by 1,050. So if you credit supplies by 1,050, your supplies is going to increase or decrease? Can anyone let me know, if we credit supplies, does that mean that our supplies increased or decreased? If you credit supplies, it means that your supplies decreased, as Ali said. So what we do is that we take 9,720 minus 1,050. So if you do so, just to show you, 9,720 minus 1,050, that would be equal to 8,670, which means that my supplies amount in the adjusted trial balance, the accurate amount should be 8,670. And that would be on the debit side. Why? Because supplies is an asset and its balance should be on the debit side. And you need to continue doing the same for all other accounts. I'll be doing some more examples before I continue. Prepaid insurance, before adjustments, it was 2,400. Then it was credited by 100. If you credit prepaid insurance, which is an asset, it will decrease. So 2,400 minus 100, this means that now the balance, accurate balance in the adjusted trial balance should be 2,300. And you should just continue doing the same for the all other accounts. Now, so far, is this clear how you prepare the adjusted trial balance? You see your unadjusted trial balance and then factor in the adjustments that you have in here. This will give you your adjusted trial balances. Before I continue or move on to the next step, I'd like to take just other example for other accounts that have different normal balances. For example, unearned consulting revenue. Unearned consulting revenue is a liability. So before adjustment, it was 3,000 on the credit side. Then we recorded an adjusting entry at the end of the period and we debited unearned consulting revenue by 250. Can anyone tell me what is the adjusted balance for this item? Before adjustments, it was 3,000. After, or in an adjusting entry, we debited unearned revenue by 250. So can anyone tell me what is the adjusted amount for the unearned consulting revenue, so that I make sure that you understand before I move on to the next step? Yes, so the difference, they take the difference, 2,750. Credit minus debit, 2,000. Credit 3,000 minus debit 250, which means that your balance is 2,750, and the balance would be on the debit side or credit side. The 2,750, I should put it on under the debit side or credit side. Yes, exactly, under the credit side, because this is a liability and the normal balance is credit. So you get the point. You should be doing the same for all the other accounts until you get your total adjusted trial balance amounts on the debit and credit side. So if you continue doing the same, you would have these numbers that you have in here. And at the end, again, under the adjusted trial balance, you must make sure that now your new account balances have an equal debit and credit totals. This must be always the case. After that, what you need to do is to prepare your financial statements using these accurate amounts. So we prepare our financial statements using the amounts that we have on the adjusted trial balance. Make sure that you use the adjusted trial balance amounts to prepare the financial statements, not the amounts before adjustments. You need to use this adjusted trial balance to prepare the financial statements. Now, also, it is a common practice for companies in their worksheet. We said the worksheet is the internal document that the companies use to help them in preparing the financial statements. What they do is now they have all of their accounts in the adjusted trial balance, and they have the accurate account balances. So what they sometimes do to facilitate the preparation of the financial statements, because we said the purpose of the worksheet is to help them in preparing financial statements that includes accurate accounts and amounts. So what they do also as a step that facilitates the preparation of the financial statements is that they classify the accounts based on where these accounts are going to be presented, in which statements. So in total, in this course, we cover 3 statements: the income statements, the statement of owner's equity, and the balance sheet. So what they do is that they classify the accounts based on where they are going to be presented. So they will have certain columns dedicated for the income statement and other 2 columns for the balance sheet and the statement of owner's equity combined. In the income statements, what items we see? Revenues and expenses. So in the income statement columns, we will see all of our expenses, obviously on the debit side, and on the credit side, we will see all of our revenues, because revenues are credit and expenses are debit. On the balance sheet and the statement of owner's equity items or columns, we will see the items that are presented on the balance sheet and the statement of owner's equity. So assets, liabilities, owner's withdrawals, and owner investments. So here in the income statement columns, what you see, your revenues, all of your revenues. If you see the only items that we see here, revenues on the credit side. So we have 2 revenues and all of our expenses. Now, obviously, the totals here, they should not be equal. Why? Because the revenue that the company has is different from or not always equal to their expenses. In fact, we want the revenue to be greater than the expenses. So the difference that you have is going to be your net income for the period or net loss. For the last two columns, as I said, you will see all your assets. These are your assets, all of your liabilities, and we have here withdrawals, so we have the withdrawals in here, and so on. So this is basically how you prepare a worksheet. You use it, it will help you get your adjusted trial balance amounts, and then you classify the items based on where they are going to be presented or where they are going to be appear in which financial statement. Now, is this clear? Mainly, the most important thing is that you know how to prepare the adjusted trial balance in here. If this is clear, please let me know so that way I can begin our chapter for today. Okay, so as I said, after you prepare the adjusted trial balance, what you are going to do is that you are going to prepare your financial statements. So what I'm going to do now is I'm going to just prepare a draft of our financial statements, which is something that we already know. So after we complete all of these steps, now we have our adjusted trial balance amounts. So now we can prepare our financial statements. As I said, we have 3 financial statements that we prepare this course. So first of all, I have my income statement. And before I prepare any statement, as I said, we always need to write 3 things: the name of the company, the name of the statements. So first statement is the income statement. Last thing that we need to do is to write the date. This is for the period ended 31st of December 2025 as an example. Okay, now what you need to do, what do we see in the income statement? Revenues and all of our expenses. The difference will give you your net income or loss for the period. So you take your revenues for the income statement, you list all of your revenues that you have, minus all of your expenses. The difference will give you your net income for the period. So this is our first statement. Our second statement is, again, you need to write your company's name. Company's name, name of the statement, statement of owner's equity, and then you write your date. Now, what is the purpose of the statement of owner's equity? The purpose is to show us how the capital has changed from the beginning of the period until the end of the period. So what we do is that we start the statement with our capital at the beginning of the period. So capital, or let me call it owner's capital, at the beginning of the period. Let's say it is 1st of January 2025. So I'll start with my statement with my capital at the beginning of the year, and then I will add any owner investment, because owner investment increases my capital. So owner investment plus any net income that I have, or minus any net loss, minus withdrawals for owners. This will give you your owner's capital at the end of the year, which is 31st of December. Okay, now for the statement of owner's equity, I will start with my capital at the beginning of the period. I will add any investments that I have, any net income that I made, or any net loss. Net income must be added, net loss obviously must be deducted, minus owner withdrawals if I have any owner withdrawals, and this will give me my capital at the end of the period. How can I know how much is my net income for the period? I will take it directly here from my income statement. Last statement that we prepare is our balance sheet. So again, start with your company's name and then the name of the statement itself, and finally your date. So this is as of 31st of December 2025. In your balance sheet, what you are going to see is all your assets, all of your liabilities, and your equity. Under the equity, you are going to show your capital at the end of the period, which is 31st December 2025. And finally, you need to make sure that your total liabilities plus equity are equal to your total assets. Okay, now so far what I did here is I presented just the structure of my financial statements. In the income statement, what is the purpose of the statement is to show us how profitable a company This will give me my net income or net loss during the period. Then I need to prepare my statement of owner's equity. The purpose of the statement is to show me how the capital has changed throughout the period in 1 year. For example, here in year 2025, how my capital has changed. What was my capital at the beginning of the year, 1st of January, how much it was, and by the end of the year, 31st of December, how much it has become. What are the things that affected my capital during the year 2025? And then I prepare my balance sheet. The balance sheet shows an overview of the financial position of the company. It lists all of the assets, all of the liabilities, and my capital at the end of the period. How can I know what is my capital at the end of the period? I can just take it directly from my statement of owner's equity. Now, before I continue the chapter, do you understand these financial statements, their structure, and each of them? What is the purpose of each of them, and what items do we have in here? Okay. Okay, perfect. I want you to just focus on one thing here. If you see, I already discussed this before, but it is very important for our today's class. If you see, I said before preparing any statement, we need to write 3 things. Name of the company, name of the statement, and the date. Let's focus on the date. So when I wrote the date for the income statement, we said that this is for the I cannot use my tools. Just a second, I'll just stop sharing and I'll reshare my screen again. Okay. So I need you to just focus on the dates in here. If you notice, when I wrote the date for the income statement, I said that this is for the period that ended for the statement of owner's equity. When I wrote the date, I said that this is for the period that ended 31st of December 2025. But when I wrote the date for the balance sheet, we said that this is as of. So slightly, if you can notice, the way that we write the date for these financial statements is quite different. Income statement and statement of owner's equity is the same. It is for the period. But for the balance sheet, when we write the date, we write it as follows, as of. So it's different. And this is not random, it is on purpose. The income statement is for the period that ended on 31st of December. Statement of owner's equity is also, it is for the period that ended 31st December 2025. But for the balance sheet, it is as of. First of all, do you see that these, or the way that we write the date is quite different for these statements? If yes, can you please, anyone let me know why do we write the dates this way for these statements? يعني ليش في الانكم statement نكتب for the period or for the year that ended 31st of December؟ ليش في statement of owner's equity لما نكتب التاريخ نقول for the period that ended 31st of December 2025، بس لما نجي نكتب التاريخ حق البالانس شيت نقول this is as of or up that this is as of 31st of December 2025. For the period يعني هذا حق الفترة اللي انتهت في هذا التاريخ. Same thing here. For the period يعني هذه حق الفترة اللي انتهت في هذا التاريخ. ولما نقول as of يعني إلى حد 31st December, this is what I have. First, before this is for things that happened in 2025. For the period يعني for things that happened in 2025. يعني حق فترة 2025. These are my revenues, these are my expenses. For the period that ended, or for the year that ended 31st of December 2025, it means that these things happened in 2025. يعني خلال 2025 these things that happened: owner investment, net income, and owner withdrawals. As of يعني up to أو إلى حد 31st of December, these are my assets, these are my liabilities, and this is my capital. Do you get this point first of all ولا لا? Because basically all of the chapter is based on these dates, or understanding why these dates are different. These dates are different, or the way that we write these dates are different because of the nature of the items that we see within these statements. يعني هذه طريقة كتابة التواريخ تختلف بسبب طبيعة الأشياء اللي نشوفها في هذه statements. If you see the income statement here, I am saying that this is for the period or for the year that ended in 2025, which means that everything that I see in here relates to only one year. يعني هني قاعد أقول حق السنة اللي انتهت في تاريخ 25. معناته كل شيء قاعد أشوفه هني داخل هذه الستيتمنت مرتبط بسنة 25 فقط. يعني this is my revenues, my sales، الإيرادات مالتنا. But these are only my sales for year 2025, not year 2024. Everything that I have here in sales, I made or generated in year 2025. All of my expenses here are incurred or used in year 2025, not any other period. And this is because of that, this is my net income that I made at what time? In year 2025. Okay? Clear, this one? Same for the statement of owner's equity. Statement of owner's equity, it shows you the capital at the beginning of the period, but mainly we incorporate the things that happened within the year that help you or that led your capital to change. Because the purpose of the statement itself shows how the capital has changed over the period. So everything that happened during the year that contributed to the change in the capital. Owner investment, any investment that the owner made in which time? In the year 2025. The net income or net loss that you made at what time? In year 2025. Any withdrawal that you made in year 2025. All of these items, 3 items in here, will help you get your capital at the end of the period. So the things that you see in this statement are all related to one period or 1 year. For example, it is our year 2025. For the balance sheet, it is quite different. Why? I am saying as of. And what I am presenting my assets, I am presenting my liabilities, and I am presenting my capital at the end of the period. If you think about it, my assets might include my cash, my land, my equipment, anything that I own. These are the things that I own on December 31st, 2025. So up to this date, for example, I have cash equal to 40,000. Up to this date, I have equipment equal to the value, for example, 10,000 BD and so on. Now, does this mean that all of my assets were purchased in year 2025? No. If, for example, today I have a car is an asset. It does not mean if today, date December 31st, 2025, I have a car and the value of this car is 10,000. It does not mean that this car was purchased in year 2025. It might have been purchased before 10 years. Who knows? The only thing that matters is that its value is 10,000 BD. I might have purchased it last year, this year, maybe for 5 years. It does not matter. But up to this point, up to this date, this is what I have. I have a car that is equal to 10,000 BD. Same for your liabilities. You might have taken a loan from the bank. The loan is not necessarily taken in year 2025. You might have taken this loan from or before 4 years, but still you have it because you did not settle all the liability yet. Now, is this point clear so far? The dates and the difference in nature of different nature of the items that we see in these financial statements. Okay, so revenues and expenses are related to one period. Same for the owner's investment, net income, and the owner withdrawals. These are related to only one accounting period. For example, it is 1 year here as for the example that I have given you. But for the assets, liabilities, and the capital, these items might be related for more than one accounting period. Now, which means that next year, if I am going to prepare my income statement next year, year 26, in year 26, when I'm going to prepare the income statement for year 26, what I'm going to do is I'm going to again write my revenues and my expenses for which year? For year 26. The revenues I generated in the preceding year 2025 are no longer relevant in year 2026. يعني خلاص السنة الجاية لما بسوي income statement بحتاج أحط فيها الريفينيوز وبحتاج أحط فيها الإكسبنسز، بس بتكون الريفينيوز والإكسبنسز مالت سنة 2026 لأن الريفينيوز والإكسبنسز مالت سنة 25 خلاص are no longer relevant for us. We already used them to help us generate net income. Where we took the net income, we used it to prepare the statement of owner's equity, but at the end, if you see what we did, we took all of our income and we stored it where? In the balance sheet. Why? Because we said the balance sheet is the only statement that gets bigger. These statements are renewed every period. income statement and statement of owner's equity كل سنة تتجدد من الصفر، نبنيها من الصفر. But the balance sheet gets bigger over time, which means that today, in year 2025, after I prepare my financial statements, I no longer need to have these revenues and expenses in my books. يعني هذا يعني اليوم في سنة 25 إذا سويت الفاينانشال statements خلاص الريفينيوز والإكسبنسز مو مهمين بالنسبة حقي. ليش؟ لأن الريفينيوز والإكسبنسز ساعدوني أحقق net income. النت income I took it, I stored it where؟ النت income اللي حققته خلال هذه الفترة خذيته وسيفته في balance sheet. If you see, this is what happened. Eventually, it ended up in your equity section under the capital account. So when you are done preparing the income statement, this revenue that you have here and this expense that you have here is no longer relevant, because next year, 2026, you will start a new period and you will start making new revenues and new expenses that will help you generate new net income in year 2026. So for now, when I am done preparing the statement, the revenues and the expenses that I generated at the end of 31st of December, by the end of that day, when I am done preparing these statements, I no longer need my revenues and I no longer need my expenses in my books. Why? Because everything related to them is stored in the balance sheet. And the same for the items that you see in here. Next year, in year 26, when you will prepare a statement of owner's equity, you will start with your capital at the beginning of the period, which is basically your owner's capital on 31st of December 25, because your beginning capital is always your ending capital from the preceding period. So next year, in year 2026, when I'll prepare a statement of owner's equity, I will start with my owner's capital on 1st of January 2026, which is nothing but equal to the owner's capital on 31st of December 2025, your bottom line in here. And then that will help you, and then you will add your owner investment in year 2026, the net income you made in year 2026, and the owner withdrawals in year 2026. That will help you get your capital at the end of the period. So which means that next year, when I prepare the statement of owner's equity, I don't need the net income that I made for this period, and I also don't need the withdrawals that I made in this period in year 2025. ليش؟ لأن هذه الحسابات مجرد تعني لنا حق هذه السنة الجاية لما أسوي statements بيكون عندي معلومات أو amounts قيمة مختلفة حق هذه الحسابات. But when you think about your assets, at the end of the period, if you have any asset, car, land, building, cash, is it going to be relevant for the next year or not? Definitely it's going to be relevant for the next year. يعني إذا اليوم في سنة 2025 نهايتها عندي كار بقيمة 10,000، لما أروح سنة 26 هل هذا الأسد يعنيني ولا لا؟ هل بيظل وياي ولا بصفرة؟ I'll definitely keep it because I'll be using it in the upcoming period. Before I continue, do you have questions about the discussion that I made this so far? Any questions about this discussion so far? Okay, perfect. Now, what I'm trying to say in this discussion is that some accounts are only relevant for one accounting period. Other accounts are relevant for more than one accounting period. And because of that, we can classify our accounts in accounting into two categories. Some accounts are temporary, and some accounts are permanent. All right, so we have some accounts that are temporary and some accounts are permanent. temporary يعني مؤقت, permanent يعني دائم. Temporary مؤقت, it's only relevant for one accounting period. These accounts are only relevant for one accounting period. They are not relevant for the upcoming accounting period. So based on the discussion that we made so far, we said that my revenues that I have here and my expenses are only relevant for this accounting period. Next year, I'll have new revenues and I'll have new expenses. For this statement of owner's equity, we said net income is only relevant for this accounting period, but we know that net income is nothing but revenues and expenses. The other temporary item that we have here is the owner's withdrawals. Okay. Our permanent items, we said the items that we have on the balance sheet. Why? Because this item is this balance sheet or this statement gets bigger over time. So when I move on to year 2026, I'll be taking all of my assets. I'll be taking with me all of my liabilities because I cannot get rid of them. ما أقدر أتخلص من liabilities مع نهاية السنة. Why? Because liabilities can only be removed when they are settled. يعني ما أقدر أتخلص من liabilities إلا لما أسددها. Right? So next year my liabilities will also come with me and also my capital. So these are permanent accounts. So all of your assets, all of your liabilities and your capital is the permanent accounts. So temporary accounts are revenues, expenses, and owner withdrawals. Permanent accounts are assets, liabilities, and capital. Temporary accounts are only relevant for one accounting period, which means that at the end of the accounting period, what I need to do is I need to remove them from my books. Why? Because I am done preparing my financial statements. I no longer need these accounts. So what I need to do is I need to close these accounts to remove them from my books. So at the end of the period, when I am done preparing my financial statements, what I need to do is I need to close or remove the temporary accounts from my books. Why? Because I want to prepare myself for the next year. I said next year, I don't need the revenue of this year and I don't need the expenses of this year because I'll prepare a new income statement and these are no longer relevant. Same for the owner's withdrawals. Next year, I will prepare a new statement of owner's equity. I don't need the withdrawals that I made this year. So I need to remove all of these 1, 2, 3 accounts from my books. So at the end of the year, when you are done preparing your financial statements, you need to remove the revenues, you need to remove the expenses, and you need to remove the owner withdrawals from your books. How you are going to remove them? I'll show you in here. Okay. Okay. Now we said that we need to remove our revenues and we need to remove our expenses. And I said the temporary accounts that I need to remove is the revenues, expenses, and I need to remove my withdrawals. So I need to remove 1, 2, 3 accounts. Now let's see how these accounts how do we have these accounts in our books? So revenues, and I have expenses, and let's say that we have withdrawals. So each item would definitely have an account. Revenues, let's say, as an example, I have revenues worth of 10,000. Obviously, revenues are recorded on the credit side. Expenses are recorded always on the debit side, and let's say that the expenses for this company is 7,000. Withdrawals are also have normal debit balance, and let's say the withdrawals of this company is 500. So let's say this company have revenues 10,000 on the credit side, expenses 7,000 on the debit side, withdrawals debit side 500. And the company already prepared the financial statements. They prepared the income statement, they prepared the statement of owner's equity and the balance sheet. So they are done for this accounting period. What they need to do is they need to prepare for the next period. And we said that they need to remove the accounts they know that they no longer need. So they need to remove their revenues, they need to remove their expenses, and they need to remove withdrawals. So what will happen is that we said they need to remove these accounts, which means that they want to make the balance of this revenue account, they want to make it 0. Why? Because they are done, they prepared the income statement for this period. Next year, this piece of information is no longer relevant. So I want to make this account 0. How can I make this account 0? Currently, I have revenues 10,000. I want to make it 0. How can I make it 0? What do I need to do? Can anyone please let me what I need to do? How can you make this account balance 0? It's currently 10,000 on the credit side. How can you make it 0? Yes, exactly. I need to debit the same amount. I need to debit 10,000. If I debit 10,000, my account balance will become 0. 10,000 minus 10,000, this is equal to 0. So to close revenue, I'm going to debit revenue 10,000, and I'm going to credit income summary. I need to debit revenue to close it, right? So this is what I did. I debited revenue 10,000 to close it. I must also have something on the credit side, because I cannot have entry with only one item on the debit side. I need to have another item on the credit side. What I credited? Income summary. What do income summary mean? Income summary is just another temporary account that I have just created now. What is the purpose of this account? It will only help me close the income statement items. يعني الغرض من هذا الحساب اللي سويته الحين اسمه income summary. الغرض منه انه بس يساعدني اصك الانكم statement items، يعني الاشياء الموجوده في الانكم statement اللي هي revenues والexpenses. So I used it to help me close my revenue so far. I will also use it to help me close my expenses, because expenses is another income statement item. So basically, income summary is also another temporary account. يعني هذا حساب مؤقت بعد يساعدني فقط في إني أصك revenues والexpenses. So after I am done closing the income after I'm done closing the revenues and expenses, I will also close my income summary. So what I did so far is I closed my revenue. How? By debiting my revenue. Now I'm done. I closed the revenues for this period. So done. What I need to do is I also need to close my expenses. So I closed revenues, done. I need to also close my expenses. Currently on my books, I have expenses worth of 7,000 on the debit side. How can I close my expenses? If I want to close the expenses, it means I want to get a balance of 0 in here. How can I get a balance of 0 for the expenses? Currently, I have debit 7,000. So to close the expenses, I definitely need to credit expenses with 7,000. So what I'll do is I'm going to close my expenses now. How to close expenses? We said we need to credit expenses. So on the credit side, I'm going to credit expense 7,000. Now what I'll use on the debit side, I credited expenses 7,000 to close them, to remove them from my books. What I need to debit, again, I'm going to debit income summary. Why? Because I told you the income summary account is a temporary account that we only use to close the revenues and the expenses. Because expenses is an income statement item, so I close it using the income summary account. So income summary, debit, credit expenses to close your expenses. So by doing this, I close my expenses. Done. So I'll remove this. Okay, remember I told you income summary is another temporary account. We create this account just to close the revenues and the expenses. Now I achieved my objective. I closed the revenues and I closed the expenses. I also need to close my income summary account. How can I close my income summary account? I need to first of all find out what is the balance of this account. How can I know what is the balance? I'll see what I did. So this is assume that this is your income summary account. First of all, you credited 10,000 to close the revenues. Then you debited 7,000 to close your expenses. First of all, I credited 10,000, then I debited 7,000. So can anyone tell me, please, how much is my income summary account? What is the balance of the income summary account? What's the balance of this account? Your balance is going to be the difference, which is 3,000. Yes, 3,000 and 3,000 on the credit side. Why credit side? Because the credit side is greater. If you think about your income summary, it is 3,000, which is nothing but equal to your revenues, 10,000 minus your expenses. So this is basically your net income during the period. The balance of your income summary account is always equal to your net income during the period. It is on the credit side because we made income this period. Okay, now I need to close this account. So what I need to do is debit or credit this account. Definitely I will debit this account because income 3,000. I close the income summary by debiting 3,000 here. Now I have a balance of 0. What do you think I need to credit? Your net income increases which account? Or is saved in which account? You will credit capital. Because your capital increases on the credit side, and if you think about it, the net income that we make, if you remember when I showed you the financial statements, I told you the net income will eventually be saved on the balance sheet. In which account exactly on the balance sheet? On the capital account. So what you need to do is to close income summary. You will debit income summary and credit capital. Now by doing this, I also close the income summary. I only have withdrawals to be closed yet. So I need to close withdrawals. Withdrawals have a normal debit balance, and my objective is to close withdrawals. So how can I close withdrawals? I must credit the same amount, 500. So what I'm going to do to close withdrawals, I will credit withdrawals by 500 on the credit side. What do I need to debit? To close withdrawals, I need to credit withdrawals by the balance, which is 500. And what I'm going to debit, I will debit the capital account. Why do I debit capital? Because we said that the withdrawals decrease our capital, and our capital decreases on the debit side. So at the end of the period, when you are done preparing the financial statements, what you need to do is to record 1, 2, 3, and 4 entries. So at the end of the period, when you are done preparing your financial statements, you need to close the temporary accounts that you no longer need. What you need to do, close your revenues. How to close revenues? This entry. You debit revenues and credit income summary. And you need to close your expenses by debiting income summary and crediting your expenses. Then you need to find the difference or the balance of your income summary account, which is going to be equal to your net income or net loss based on the situation. And based on the situation, you need to either debit or credit your income summary. If you are making an income, you need to debit income summary and credit capital. If it's a loss, that would be the opposite. For the capital, you credit your capital by, for the withdrawals, you debit your capital and credit your withdrawals. Now, these entries are always going to be fixed, except for this income summary based on the situation. Whether it is a loss, it's going to be the opposite. Capital is going to be debit, income summary is going to be credit. Now, is it clear so far? Okay, perfect. Now, after you close your accounts, it means that you no longer have these accounts in your books. So when you're done closing these accounts, it means that you will remove these accounts from your books. So what will remain left is only your permanent accounts. يعني عقب ما نصك هذه الحسابات معناته قاعدين نشيلها من our books, من السجلات مالتنا. So what will happen in our post-closing trial balance, this process that we did is closing process. we close the accounts that we no longer need. So after we close the accounts that we no longer need, the temporary accounts, we will end up with having a post-closing trial balance that only includes the permanent accounts. What are the permanent accounts? Assets, liabilities, and your capital. So post-closing trial balance will include only assets, liabilities, capital. There are no revenues, no expenses, and no withdrawals, similar to what you have in here. Okay, so this is our step after we prepare the financial statement. I can add this to our accounting process steps, closing entries. Now, is it clear so far? Or you have questions? So closing entries that I explained just now are basically all of the chapter. Mainly the chapter is all about these closing entries. So that's it for the chapter. Do you have any questions? Any questions? Okay. One thing also that is important in this chapter is basically our assets. We all know what our assets and liabilities can be classified into categories. We all know what we mean by assets, and we all know what we mean by liabilities. Assets are things that we own and control, and these are expected to generate a future benefit to the company. Liabilities are obligations that the company have. Assets, both assets and liabilities, can be classified into categories. What categories exactly? Current and non-current. So we have current assets and we have non-current assets. What do I mean by current and non-current? Current assets are assets that are expected to be sold, collected, or used, or we are expected to benefit from these assets in a short period of time, or the current period. You always can think about 1 year as a threshold. If this asset is going to be used in 1 year or less, it is classified as a current asset. If you are going to use this asset for more than 1 year, or you are going to benefit from it for more than 1 year, then this is a non-current asset. For example, cash is a current asset because it is more likely that we are going to spend our cash in less than 1 year. Account receivables are also current assets. Why? Because it is expected, these accounts receivable are amounts that are expected to be received in a short period of time, most likely in less than 1 year. Inventory, which means بضاعة, also these are current assets because it is more likely that we are going to want to spend or to sell our inventory in less than 1 year. Prepaid expenses are also current assets. If you have investments for the short term or short-term investments, these are also current assets. So any asset that you are going to use in 1 year or less. For example, supplies. If I tell you supplies, which are basically papers, pens, markers, these are current assets or non-current assets? Supplies are current assets because we don't use them for 4 or 5 years. We only use them for in 1 year or less. Supplies are current assets. Now, non-current assets can be classified into 3 categories. So basically, non-current assets can be classified into 3 categories. Long-term investments, plant assets, and finally intangibles. Long-term investments استثمارات طويلة, right? So any investment that we make for a long period of time. So for example, if we buy stocks and we plan to keep these stocks for a long period of time, we are expecting to keep them for a long period of time, more than 1 year. This is a long-term investment. If we buy bonds, لما نشتري سندات ونقرر نخليهم حق فترة طويلة, this is also a long-term investment. Notes receivable that you are expecting to receive or collect after 1 year is also classified as a long-term investment, because notes receivable, these are amounts that you are expecting to receive. It is just as if you are lending someone money. It's just like if you are giving someone a loan. Definitely you are going to take interest on that. So this is also called an investment, long-term investment. Plant assets, these are assets that we use in operation for more than 1 year. These assets must be physical or tangible. Physical, يعني you can see them and you can touch them. For example, if you have cars, lands, buildings, machine, equipment, anything that is physical and you use it in operation for more than 1 year. Intangibles, these are assets that the company own, but these are assets that cannot be seen and cannot be touched. So هذه أصول تمتلكها الشركات ولكن ما نقدر نشوفها ولا نقدر نلمسها. Examples, patents يعني براءة اختراع. إذا الشركة عندها براءة اختراع فهذه this patent cannot be actually seen or cannot be touched, but it is an asset that generates a benefit to the company, but we cannot see it and we cannot touch it. Another example could be the goodwill. Goodwill is basically the reputation of the company. سمعة الشركة تعتبر أصل أو asset حق الشركة ولكن we cannot see it and we cannot touch it. So this is an intangible asset. The trademark, العلامة التجارية, the company's logo or the brand name. Also, these are things that generate benefit to the company, but they cannot be touched or cannot be seen. Now, the same for our liabilities. Liabilities can be also current and non-current. Current liabilities are liabilities that we are expecting to settle in less than 1 year. يعني أي liability مفروض نسددها خلال أقل من سنة. Non-current, any liability that we will settle in more than 1 year. For example, accounts payable. Accounts payable are the amounts that we should be paying for suppliers. These are current liabilities because it is likely that we'll pay them in less than 1 year. On the other hand, notes payable are most likely non-current liabilities. If we, for example, take a loan from the bank and we will have to settle this loan in 5 years, this is a non-current liability. So to differentiate between current assets or non-current liability, current assets, non-current assets, current liabilities or non-current liabilities, what you need to do is to always ask yourself a question. When I am going to use this asset or benefit from this asset, or when am I going to settle this liability? If it's less than 1 year, this is current. If in more than 1 year, this is non-current. So the threshold is 1 year. Any questions? Any questions about the chapter first, and then we'll address any other questions. Okay, so basically this is mainly what we have to cover in chapter 4. At the end of the chapter, you have an extra exercise that you can go through yourself. It's about how you record the closing entries for the revenues, expenses, and withdrawals, similar to the one that I will be solving in your tutorial session on Thursday, inshallah. But it's just for extra practice for you. For the midterms have been postponed, so it's not going to be on 30 of March. Guys, do you hear my voice? Because I cannot see. All right, so perfect. Midterms have been postponed, so your midterm is not going to be on 30 of March. Dates are not determined yet. يعني للحين ما تحددوا تواريخ. بس as soon as we get the final confirmation متى بيكون التاريخ لما يتحدد بشكل نهائي إن شاء الله we'll share it with you as soon as possible. بس the material is going to be the same. Midterm is going to cover chapter 1, 2, 3, and 4, but date is not determined yet. When it's determined, as soon as it is determined, I'll share it with you, inshallah. Any questions or any other thing? I don't know, honestly. We don't know if we... I don't know. No one knows, actually. But inshallah, we can go back to campus يعني, if things get better. Any other questions? All right, thank you so much. You too. Have a good day and take care.